Hi, this is Charlie giving you Monday's market commentary. I hope you're very well. I've got a euro chart up here along with the average true range, because the average true range is putting into perspective what we're seeing here this year. And what we're seeing is a massive, huge drop off in volatility, and that obviously corresponds to short-term trading. So if you're a day trader, for example, the lower ranges means that there's lower pips potential in your trade, in your profitability, as opposed to when there's higher volatility. That means there's higher ranges, which means there's more pip potentials, and it also means there's fewer opportunities. It's not to say there's not, because of course there's still opportunities, but just puts it into perspective. So looking at the average true range down here, we can see that we're currently around about 46 pips. Even back to the early part of this year, through January, February, March, we were sitting in the 70s, 80s. So we've seen it drop off just in the last couple of months, really since since April, since Easter, and so of course it affects, if you're a forex trader, it affects your ability to be able to trade and get lots of trades a day, or be able to get lots of pips. Because if you're a day trader, then, or even a short-term trader, there's the daily ranges are smaller, which, even if you're a short-term swing trader, there's not as many pips on the table, so to speak. So let's put this into perspective and go out to a weekly chart and actually wind back the clock a bit, and you can see actually we've now got lower ranges than we had even in 2007, and even this is actually lower than that. It's just the scaling. I think you would have to go all the way back to the 1980s to actually see. Oh, it's not even showing it properly. Oh, this is FXCM prices, so they're not. It's not exactly right there in the 90s, but actually change this over. Might see it a little bit better. Oh, there we go. So we're lower than we were in 2000 in the 90s. We've got to go all the way back to the 1980s to see on this chart here, to see lower ranges. So putting it into perspective, there's still some nice opportunities out there. The market's still moving around. There's still some nice opportunities, but just factor it into your expectation levels, because there's no point approaching the markets today as from an anticipation or expectation perspective as you would have done even in January of this year, because the ranges in January were 30 to 40 pips greater on the euro dollar than they are today. Now, I expect that, well, obviously we're right in the thick of the summer, so I don't expect too much of a drastic change in volatility until we get through to September. But then hopefully what we'll see is a steadily rising. Let's actually now zoom back out, or zoom back in. Rising volatility or average true range. So we might see this average true range pick up as we go into the latter part of this year. So as we go through the summer, there's still some nice opportunities. Some nice ones on Friday. But I don't expect too much until we get to there. So it is the most important chart of the year, really, because it just puts it all into perspective. Everybody's moaning about it. The professionals are moaning about it in the city. But it will come back as and when volatility decides to come back. So for now, that's where we are with the volatility. Let's have a look at a couple of charts anyway. The euro is sitting in a range at the moment. This is the daily chart of the euro dollar. So I'd like to actually see some upside here. I mean, it's held quite well. It didn't punch back down. As much as I'd have loved to have seen us come back down to retest the 135.50, at the moment it's being pretty stubborn. I mean, I really don't care which way this euro dollar goes at the moment, but yeah, I mean, if we can get a break of this daily 50, then all of a sudden the door opens back up to a retest of 137 and then 137.50. So obviously the easy one is, if we break these lows, then we should want to come down to retest those low 135s. So we should see. There's a reasonable amount of news out this week. And talking of news, let's go to the pound. Now the pound's been pretty range bound as well, but again we've got CPI out tomorrow. I think Carney's speaking tomorrow as well. So there's going to be quite a lot of news out on the cable tomorrow. So that's going to be definitely one to watch for tomorrow. And then dollar CAD on Wednesday, because the dollar CAD's had some decent moves, so we'll look at that. But again, the pound, again, we're just watching a market which is effectively just going sideways. So if you're a swing trader, it's got to be quite tough, because you're not getting any trends over this last week and a half or to 2 weeks. developing. It's just going sideways. So that's what I mean about this whole volatility thing. So let's go and have a look at. So with the pound at the moment, if CPI ticks up, then we could see a breakout to the upside and we see 172 tested. So watch out for that. If it disappoints, then we could certainly see back down to 170. So fairly straightforward on the pound. But so far, obviously, it's in bullish mode, and expectations are of a rate hike at some point. So we need to be on the lookout for strength coming into it. Obviously, if those figures disappoint, then we will see a flush down. But otherwise, let's look for strength coming in. What else have we got here? Oh yeah, the dollar CAD. Let's have a look at that one, because that one had the big move on Friday, which I was trying to get in on the intraday basis on the live trading videos, but I was already long on it, and but I wanted to trade it for the video update as well. So, but I couldn't get in because it just shot up. So anyway, at the moment, this one's gone sideways for quite, again, a week and a half. More disappointing news out for Canada on Friday, and then we've got news out this Wednesday on CAD. So I think that we've still got to keep our eye on this for some more potential upside in this currency pair. If I were to put fibs on, so let me see. So if I put, let me see, drawing tool. If I actually put some, if I can find them, there they are, don't use them that often, but if I put some fibs on, and obviously we don't know if this is for certain the low, but let's assume it is for now. That's what you have to do with Fibonacci. So we're looking at a minimum retrace of 23% up to 107.76. We're currently at 107.40, and a 38% retracement takes us up to 108.72. So another 100 pips before that, beyond that. So it does have some potential on the long side. Obviously, anything can happen. If the news out on Wednesday is more bullish, then we could see a plunge back down to these lows again and retest those. But for now, we've got some potential there. So we'll be watching that one with interest this week on dollar CAD to see if that report comes out on Wednesday and it's again not favorable, then we've got some nice potential upside moves to come yet on that pair. Let's go and have a look lastly at the stock indices. Let's go and have a look at the S&P. I've pulled up the futures at the moment, because the S&P has actually been diverging. I haven't got the indicators up at the moment, but it has actually been diverging up here. Same with the Dow, and yet what we're seeing is a nice couple of days up since Friday. We put the since last week we put this hammer in. Then we had Friday's sort of inside up day, and then this is this morning's price action. So, but we've still got this overall divergence in place. So I'm a little bit wary at the moment. Today, on an intraday basis, it's looking quite nice and bullish, and so I'm obviously happy to just watch it at the moment. But if I see it won't happen today, but tomorrow or Wednesday I start seeing some weakness kicking in, then I'm probably going to look to try and hook in on the downside on that with the divergences that are in play. If I see weakness kick in, so I need to see momentum roll over on those intraday charts, which is obviously it's not at the moment, it's up, so I'll leave it alone. So we'll see about that one, but we have got divergences. They are warning signals, so that's what I'm just being aware of, and I just want you to be aware of right now. Right, I shall leave that with you. Be back on Friday for live trading.